and welcome to our Lunch and Learn Today via webinar. Today I'm super excited because we have Chris Farrands here from Cohick and Associates, and you're a returning guest for us.
I am. It's been a little bit, but I'm happy to be back, and so thank you. My first experience doing this virtually, but again, thank you for having me, and I'm super excited to talk about this today.
Well, we appreciate your knowledge, and I think maybe the third or fourth time that Chris is with us. So today you're here to talk to us about the tax laws, what's changed from 2022 to 2023 tax laws. So I got that right?
Cool.
Years.
Correct. Yep.
And then we're going to talk about how this affects agents and things you can do, best practices, that kind of stuff.
Absolutely. Absolutely. So thanks, Rebecca. Yeah.
All right. So if you do have specific questions, please make sure that you just put them in the chat. If you're on Facebook, you need to accept the StreamYard so we see your name. Otherwise, it's just going to say Facebook user. So if you want your name to show, we'll need that. But go ahead and put them up at any time, and we'll definitely have a Q&A at the end. But to get started, Chris has a PowerPoint, so we're going to show you that as we're talking here to maybe even answer some of your questions with that.
Absolutely. Thanks, Rebecca. I appreciate it. And yeah, thank you all for attending here today. I appreciate everyone utilizing some of their lunchtime to learn a little bit about tax. There could be fewer things more fun than this over a lunch hour. So thanks for being here today. And going to talk a little bit about some tax law change for this year, the key highlights, but then really talking about spending some time on setting up some new healthy habits for the new year, and really sort of tuning up what you do as an agent with regard to sort of tracking things and kind of knowing where you're at financially. So that way you're in a good place, or as good of a place as possible from a tax perspective. So we'll get started here with the PowerPoint. So again, we're kind of taking a parallel on both health habits and healthy financial and tax habits, and doing sort of a tune-up. Of course, the new year is a great time to establish any new habit, and also financially, since all of us individual income taxpayers operate on a calendar year basis as far as the government is concerned. We start off the fresh new year with the new tax year. So 2023 and 2024, most substantial changes that we've seen this year were really related to retirement options and credits, and also related to energy credits. So what I'll just say is, if you do anything energy related to your home, or maybe you have a client considering doing something energy related to their home, and that may range from a new heat pump to a geothermal system, or maybe a solar system. Also anything vehicle related as it relates to maybe a new or used energy efficient car, electric car, or plug-in hybrid. Your best bet is to work with a professional. Anytime you're considering going the route of any type of in-home energy system that you believe qualifies for a tax credit, or maybe vehicle that qualifies for a tax credit, your best bet is to contact a professional to talk through that before you make that large financial investment. Oftentimes, the individual selling the system may be pretty knowledgeable, of course, on the credits available. However, they do not know necessarily your individual tax picture, and oftentimes may be unaware as to whether or not you will be able to fully utilize the credit that's available, and sort of the timing of that. And so when we're talking about these things and some of the dollars that are being spent, of course, it could be some pretty big dollars being spent on some of these systems or cars. And some folks will sort of make that decision and base it on a tax credit. So we just want to be sure that you are actually going to be able to capture that. So, so if you're doing anything related to energy, good time to talk to someone. Lots of changes to retirement, retirement options available, and the timing of retirement, and RMDs with IRAs. So again, if you're considering a change in retirement, maybe have some questions related to retirement, or you work with a financial advisor, it'd be a great idea to include a tax person as a part of that team and that conversation. That would include, of course, yourself and your financial advisor. So again, big changes this year to consider. Of course, are retirement related and energy related. There's some other tax law change, but those are the two largest areas that received the most updates this year. Looking ahead, we do have the expiration in 2025 of some of our existing tax laws. We're sort of watching that. The Tax Cuts and Jobs Act is largely set to expire. And so something to consider is, certainly the rates that we have today, we have no guarantees. So a lot of the tax law could change pretty substantially here in the next 2 years. And so that's something else sort of on the horizon.
And you're just going to have to come back and explain that.
I certainly will. And the scary part is currently that it's set to default back to old tax law should essentially Congress take no action. And so as many of you might feel anxious about that as I do, no action in Congress seems to be the default at times. And
especially on
with tax law, yeah, and when it comes to tax and funding and monetary spending, certainly a hot topic. And so the concerning part would be that potentially, just no change at all or no action at all could result in a substantial change for individual taxpayers and small business owners, which our group here today are all small business owners in their own right. So as far as tax law change, I wanted to cover most of those topics. I'm sure we might have some questions, but I want to get into kind of the core of the PowerPoint and what we're looking at today. So again, it's a brand new year. It's a fresh start. Great time to sort of reconsider how it is that you're tracking things, maybe what you're doing personally and professionally. Great time to start a new habit. And some folks choose maybe certain fitness goals, health goals, and financial goals. And so it's a great time to make those changes. Of course, you can make positive change at any point during the year, but the new year offers a fresh opportunity to make that happen. So we can go ahead and try to click on the next slide here. So we're gonna start off. Certainly, again, it's January. It's a great time to sort of take action and start training yourself to sort of change the way that you track and do things. And habits that you start now related to tracking will certainly pay off throughout this year. Tracking your income and expenses will come into play and be super beneficial when you're having conversations or making considerations related to making estimated tax payments and certain financial decisions you might have to make personally. And then, of course, if we keep on top of this throughout the year, we will be able to have most of our financial data together to be able to move forward with a tax return a little more than a year from now. All of these things that we need to keep track of as a small business owner are much easier to do if we sort of chip away at them over the course of the year, rather than sort of waiting until the end of the year or waiting until months down the road to sort of try to recreate what it is that happened financially throughout the year. So again, make it easy on yourself. You want to make sure that whatever system you have in place, it works for you. If you're a paper person and you like to keep things, then that's fine. There's absolutely no reason to force yourself into some sort of software or system that makes you uncomfortable, and if it makes it more difficult for you to do, you're less likely to do it. So just like maybe health or exercise, you want to do what makes the most sense for you, and that may or may not be the same as someone that you share an office with. So if you're an electronic person and you want to scan your receipts, if you want to utilize a software like QuickBooks, Excel, maybe a Google document, we're going to talk through some of those options for tracking. Those are all very good possibilities. But at the end of the day, you want to make sure that you are putting in place a system that you can actually follow, because that's going to make it much easier. The very start of this would be, we just want to make sure, and the beginning of the year is a great time to do it. We want to separate your personal life from your business. And so we want to be sure, and with real estate, oftentimes you become a realtor, it might be your first time at self-employment. You might not have been self-employed before. And so in the beginning, it's very easy to just sort of get started slowly, and your personal life and your business life is all sort of happening within the same bank account, maybe utilizing the same credit cards. And the best advice, if you do nothing else today, if you haven't done so already, setting up and separating your personal banking from your business banking, your personal credit cards from your business credit card, will really go a long way. If you do nothing else at all and track nothing else throughout the year, that alone will save you a ton of time and energy throughout the year. You can look through and really gather your financial data for the year by looking at bank statements and credit card statements to substantially put together your income and expenses for the year well after the fact. Again, it's best to stay on top of things, but if you do fall behind, if everything's been separated and you have full confidence that everything that ran through the business account was business related, again, it's going to make your life a lot easier, and it's going to make it possible to sort of recreate things. Starting that earlier in the year is certainly better. We're going to talk through some software options, some tracking systems. Utilize those certainly when it makes sense. Consider scheduling time. I know, Rebecca, you're super busy. You have to time block for certain things.
Absolutely.
Some of those things are not money makers in the moment. They might be more administrative, and so it's difficult, I think, for all of us to take time to work on business related items that might not result in a sale today, but they still warrant time and consideration. And so scheduling some time to take care of administrative tasks makes a lot of sense.
And I would say you're going to spend the time one way or another. So
Yes.
Either you do it up front, get your system, and spend less time overall,
Yep.
or you wait, have a mess, and then you're trying to figure it out. And you might have a deal going on that needs your attention, and you're trying to figure out your taxes. So it's just better to do it up front.
Absolutely. And I understand certainly the spring is a busy time and season for agents. And so what would be great is to start the year off right, keep good track of things. If things get a little bit hairy, let's say in May or June, and you fall behind a little bit, it's not so bad to recover from that when things maybe slow down a little bit. But to come into like October, November, December, or next January and not have really kept track of anything is going to make your life really difficult. And you're right, you're going to spend just as much time doing it then that you would if you would have chipped away at it throughout the year. And I'll also say, I talk to folks all the time about saving taxes. The number one tax savings tip that I would have for you is make sure that you're actually capturing all the expenses that you spent money on. Oftentimes, when folks wait until the end of the year, to sort of go back and determine what their expenditures were for the prior year. If they don't really have a good system in place and a good separation of funds, they often miss expenses to their own detriment. And so folks often overpay in tax just because they've left legitimate expenses off the table, and they've not really captured everything that they spent money on, just because they sort of forgot. It's very easy to do. And so if you think, oh, I'll remember this, well, 6 months from now, you're probably not going to remember it. Life gets busy. Things are crazy. So schedule time for yourself to do this. It's going to make your life a lot easier. And then I also say, employ help when needed. So if you've reached a level in your business and you've determined that you are too busy and that your time is best spent, capturing new business, maybe you're running a team, maybe you've got folks that you're working with and other businesses, you don't have time to keep track of everything yourself. I get it. Employ some help. That person might be on staff with you. It might be an admin. It might be a family member or a friend, or it might be a professional that offers bookkeeping and payroll services and tax services. Our office does that, and it is something that I think has certainly a place when your life dictates that. So again, it's something that's nice to stay on top of. So yeah, no, I think that's important for everyone. And again, I'm speaking right now with regard to real estate, but this is the same for all business owners. And so, yeah. Rebecca, I'm sure you've experienced all this stuff. You've been self-employed for quite some time now. I know you have these systems in place, but it doesn't make it any easier. It's still difficult.
You got to have somebody doing it, somebody on top of it.
Yeah,
for sure.
So, okay. So, self-employment is great. A good quote from a client of mine is, you're self-employed, you get to pick which 12 hours of the day you get to work. So fantastic, right? So it does have a lot of benefits, but it does take extra discipline and it comes with a lot of extra responsibility. You were kind of solely responsible for yourself. You might have, again, some folks in your corner. You've got a broker, you've got maybe a team that you're with. And so you've got resources, and that can all be a great help. But ultimately, at the end of the day, you are kind of responsible for yourself. If we're talking through, a tax balance, or if we're trying to determine an estimate, or if we have an issue to resolve with some government agency, the IRS, a local authority, that's between the individual and that agency. It's the other folks involved that might be on your team, certainly might have played a role, but it ultimately comes down to you. And so there's a lot of responsibility with being self-employed, and just keep in mind, it's super easy to kind of forget. You might have an office that you go into every day. You might have coworkers that you see every day. And so it's kind of easy to think for a moment that, there's just like any other position, right? But any other job, but it's not. I mean, you are truly self-employed as an independent realtor. And so it's just important to sort of recognize that. And with that comes down, kind of what we were talking about previously, the tracking of income and expenses sort of falls generally on your shoulders. Again, your broker is a resource. They might have resources available within your agency. You might think, okay, well, my broker is going to be giving me a 1099 every year, and so I should look at that 1099 to determine what my income is. And although that's a fair consideration, ultimately you would want to be sure that what is showing on the 1099 does match what you believe you were paid. And if there was a difference, that you would be able to ask for sort of a reconciliation between what's showing on the 1099 and what it is that you believe that you received for the year. So you know that you're accurately reporting, your income for the year. There are situations where, certain agencies might withhold certain fees or different things from compensation, just to sort of pay overhead expenses. And the gross payment shown on the 1099 might be higher than what you actually got in your bank account. And we might want to just be sure that we're capturing those as expenses, because that would be an allowable expense if it's being reported as gross income. Again, tracking includes both income and expenses. And so oftentimes as a realtor, you're always thinking about expense. And although that's extremely important, I do want to mention that you certainly should keep track of your own income as well to sort of be able to reconcile that. With health, fitness, that sort of thing, and with financial health, there's a lot of parallels. Being consistent is key. Doing anything, if you're 80% correct about it and you can do it all the time, that will serve you well. If you're trying to get in shape or do something, sometimes folks will get caught in the nitty-gritty details, and they'll either sort of maybe lose hope or fall off track, and it's sort of easy to do. But I would say give yourself some grace and do the best you can. So if you're tracking income and expenses and you get behind for a few weeks, just like, you had a goal to maybe get in shape and you're going to go to the gym and you missed a week, give yourself a little bit of grace, hop back on it. If you missed a few weeks of tracking, there's no reason to then say, well, just forget about it. I'll deal with it in the year. I've already gotten behind. No, give yourself a little bit of grace. It's okay. Get back into it. Again, ask for help when needed. And budgeting is key. So, whenever you're, looking at your business, you want to have the ability to track things as they happen, but we also want to sort of budget and account for things before they happen. And we also want to set targets for ourselves. So these are all things that we can kind of do at the beginning of the year that can help us find success later in the year. And so, again, I think it's something that we all think about doing. It's, of course, easy to say, difficult to put into place and put into practice. But yeah, it's something that we all can work on. And I think that, again, there's a lot of parallels between sort of health, fitness, and financial fitness. So yeah, I guess we've all got New Year's resolutions. Certainly, setting up the right financial systems, might be some of those resolutions for some folks listening today. So, what the heck is even an income statement? What are we even talking about? As an individual realtor that's self-employed, we will pay tax on our net income from that activity. And our net income is, of course, our gross revenue less all allowable expenditures. And so we actually don't pay any type of income tax on the gross compensation or on the total compensation received from the broker. We pay income tax after all expenditures are sort of accounted for. And so, the income statement is really the reconciliation between what that gross payment is less the expenses to come to the net. You might hear other financial statements like maybe statement of cash flows or a balance sheet. Those items for an individual income tax payer are not a part of the tax filing for an individual, but they are a part. The income statement is a part of that tax filing, and with most individual income taxpayers that are self-employed as a realtor, that's reported on a schedule called Schedule C. And we'll actually take a look at a Schedule C here later in the presentation. So yeah, if you hear folks refer to like net, net income or gross income. Gross income is before any expenditures. Net income refers to income after all expenditures have been paid for. So both numbers are important. You always want your gross to be increasing. And as a realtor, that generally means that your net will also increase in proportion. However, it's important to have a tab on both, and your net income is ultimately what's going to drive potentially, your income tax.
And I always remind people, especially if you want to buy a house or refinance or whatnot, make sure you're talking to your accountant, because a lot of people write off all the expenses that they can because they don't want to pay taxes. And I get that, but the government says you can't have your cake and eat it too, right?
Yeah.
So we have to take those expenses out as well when you go to apply for a mortgage. So it is important to actually show a net income on your tax return.
Yeah, of course, we don't want to pay any extra tax. No taxpayer wants to pay more than what they need to. But yeah, I mean, your net income that's reflected on your income tax return will be utilized in other areas, such as a loan application. And so it is important to certainly consider that. So yeah, now it's an important point, and I would agree. It is this sort of give and take. Folks don't like to pay income tax. However, that net income does allow us to do certain things, like potentially providing lending. There are certain adjustments that can be made, certainly, related to depreciation, certain other adjustment items, but again, generally speaking, that net income is going to be what's utilized. So yeah, when we're talking about an income statement, there's a lot of uses of an income statement, so who are the users of the statement? If we're looking at an income statement, that could be used for maybe a loan. It might be used with your tax accountant for filing your tax return. It's used by you. That's the income statement can be used for you to sort of track your own business. It can be used by you to certainly track your business. It might be used by you at some point to sell your business. If someday you're looking to retire, you've established a very nice book of clients, and you're at a point in your career where you're looking to retire, and in some cases, there's certainly some value to be had there for that client list and that relationship. And it's going to be important to have tracking in that historical data to provide to prospective buyers, should you want to sort of sell your book of business. So that's something to consider as well. And so the other thing just to mention is oftentimes financial statements are required throughout the year. So when you're self-employed, most folks are thinking, I just need this for my tax return. That's all I need it for. That's true in most cases, but often when you're looking for lending, maybe applying for a certain program, you might need to know what your net income is through June 30th. And so having some systems in place allows you to sort of produce that in relatively easy fashion. And if the bank calls and said, hey, yeah, you can get the loan, but we need your tax returns, but we also are going to need a financial statement through June 30th. That's something that's nice to have on hand if you need it.
So Chris, because of time's sake, I want to make sure we get some questions answered that people came in ahead of time with.
Yep.
So I'm sorry to derail you here for a moment.
We're good.
The expenses. So you talked about keeping track of them, but would you recommend the software, or I know you said it's up to their preference and all that kind of stuff, but you have individual agents and then you also have teams. So is there a good software you would recommend? And with that, like a mileage app?
Mm-hmm. Yeah, absolutely. If you've risen to the level where you've got a team, I really see no way to really track things efficiently without a software. You've sort of, graduated from any type of paper or Excel system that's reasonable, you're probably looking at instituting QuickBooks. It's the most widely used software by self-employed individuals, and it would fit well within sort of a team model. For all agents, I would definitely recommend MileIQ. MileIQ is a mileage app. It sort of runs in the background. It'll prompt you whether it's a business or personal expense. Mileage is oftentimes the largest expense that an independent realtor will have. So, and it's also frankly, the number one thing that will likely be audited on a self-employed individual and a realtor's income tax return. So, anytime you're in any type of audit, review, enforcement situation with any of the government agencies, they of course go after the high dollar items and the items that they see to be the most abused. And mileage is always sort of at the top of the list, and especially for realtors. So,
and MileIQ is easy.
It's super easy. It's a tried and true system. It's been tested, and my only thought with that is, if you could, potentially back that up either through paper or through pure backup, just to have it available should anything happen, with your phone or that accessibility. Because again, the IRS doesn't really go for the I had it, but my phone got wet. And
my dog ate it.
Yeah, my dog ate it, and I didn't have the Apple backup set correctly. So we just want to be sure that we've got those systems in place. So I'm just going to flip forward here a little bit. We've talked about separating of banking and credit cards. We talked a little bit about mileage and MileIQ and the reason why that's so important. And you mentioned, Rebecca, sort of systems and areas or ways to track things. Excel is certainly perfectly acceptable. I've got lots of clients utilize an Excel worksheet or some sort of personal worksheet that they have to track income and expense. That's fine. I have a lot of individuals that use Google Docs and Google Sheets. That's certainly allowable and works very well. The accessibility is great. Your Google Drive is available to you wherever you are. You can log into it. You can also, if you've got maybe an admin or someone you're working with, can easily share that information and be inputting and reviewing information at the same time. And as far as bookkeeping software, again, QuickBooks is going to be the best. And then I'll just also mention that there may come a time or place where you want to employ maybe a third party. And so it might be somebody in-house, and that might be like a company, a true third party to do bookkeeping for you. So that's just some sort of options. We talked a little bit about Excel. It's widely used. It's easy to use. If you have an admin coming in, they'll be able to use it with no training. Most folks have that training in high school.
Yeah.
And super low cost. You're not going to get any cheaper. Google Docs, super cheap and low cost as well, and super accessible. QuickBooks and Quicken and some of those softwares have a cost, but they also offer true double entry accounting. And so what I'll mention is with Excel documents, maybe paper ledgers in most cases, or Google. It's really single entry accounting, which means that you're just tracking income and expenses, and you can't really tie per se. And with QuickBooks, if it's utilized properly, it offers true double entry accounting to make sure that everything that's transpired within those credit card and bank accounts that are being reconciled through QuickBooks, that it is all captured. So before we get to this next slide, is there any other questions you wanted to hit?
Well, I wanted, and I think it's going to tie into this because I see expenses up there.
Yeah.
So what are some expenses people forget? Because if you're a real estate agent, can you write off things like dry cleaning?
Yep. Yeah. So dry cleaning for specific uniforms that maybe certain polos, those sort of things that have maybe a broker's name on it are going to be allowable. Certain apparel that requires maintenance and cleaning. Your suit that you wear to church on Sunday morning, not necessarily. But there are certain items that are allowable with that. As far as expenses that folks forget, I think back to our original conversation, I think that folks often short themselves when they don't track things properly. And that goes for, just simple office expenses. The things they just picked up on the run. They needed something really quick and they just grabbed it. They had a client, I know agents go above and beyond all the time. So they had a client that was trying to close and there's some like leaky faucet and the agent's like, I can fix that in 10 seconds. We can get closing done still today. They run to Lowe's and grab it and they, it's so easy to forget those sorts of things. And so oftentimes I think expenses that are paid for sort of on the fly or in the moment that are sort of unusual, those are often forgotten. And then I'll also say that I mentioned this earlier. Sometimes agents are paid sort of a gross commission, and then certain expenses might come out of that gross commission, maybe a desk fee or rent or that sort of thing. And so we just want to be sure that what's being reported on the 1099 and being reported as gross income is what you actually receive in your checking account. And if it's not, we are going to still report that gross income based on the 1099 that was issued. But that difference between the 1099 and what you actually receive, if that's an allowable expenditure, we want to capture that. And that's something that's very easily missed. So those are some big items that we see that are often missed. Folks are pretty good about capturing maybe their cell phone, that sort of thing. Those are kind of easy things most of the time. And certain regularly recurring expenses, most people, even if they fall behind, sort of remember those.
Yeah.
It's the sort of oddball expenses that happen often in a moment's notice or in a hurry that are often kind of forgotten.
Yeah. And then if it's a single agent, they're generally a sole proprietor filing a Schedule C on your tax return. And then should they become LLCs or S corps or whatnot when they do a team? Is that kind of the?
Yeah, I mean that certainly presents a nice time to consider that. An S corporation does offer at times some significant tax savings. Forming an LLC in and of itself, generally speaking, does not really provide any tax savings. So, if you are a sole proprietor, you form an LLC and you do nothing else, and that LLC is owned solely by you, that LLC is considered to be a disregarded entity, and it's still taxed as a Schedule C. Certainly, an attorney can speak to the legal protections that are then offered. So there certainly are some benefits to it, but from a tax perspective, just by simply forming the LLC, we've not really done much. But it would provide the opportunity then to maybe elect to be an S corporation at some point in time. And so that the benefits there, and there are some significant benefits, are sort of best discussed on a case-by-case basis. Yeah. But yeah, I think you're absolutely correct. When you're at the level where you're forming a team, that's a whole other time to really start to consider, ramping up the systems you have in place. And that might be from tracking and bookkeeping to entity status or structure, LLC, and tax structure, maybe S corporation. And so that's a perfect time to do that.
So good time to talk to your CPA and to your accountant.
Yeah, and you can do all those things.
Or you're speaking as accountant.
Yeah,
your attorney, that's the word.
And you can do any of those things really at any point in time throughout the year. But it certainly does provide a nice clean break if it's done at the beginning of the year. It provides an opportunity for the full year, the full tax year, to be captured in that entity, versus sort of having this split situation where you've had some activity as a sole proprietor some activity as another type of entity structure. And so then you have to separate sort of those two tax pictures from one another because we've got two different tax filings then.
So you should have had the conversation fourth quarter.
Probably. But again, certainly something that is worthwhile considering throughout the year. Again, the beginning of the year, end of the year is certainly the best time to do it though. Yeah.
Well, we're about 45 minutes in, so why don't you hit the highlights that you feel is important?
Yep. So I just put up on the screen, this is the Schedule C. So this is not some like accountant secret. If you're wondering like, well, what exactly is my accountant putting on my tax return? I just show this because these are the categories that we sort of try to funnel everything into. So, if you're at home or in your office and you're thinking, okay, well, I'm just going to create a spreadsheet. I'm going to create a Google Doc. Where should I even start? Well, here's some expense categories that would be a great start. Now, I will note on here, certainly not all these categories would be utilized. There's a lot of categories on here that will likely not be utilized. As a realtor, I don't really think we're going to be using line 12 depletion. Not likely to be happening. And you might look at a line 13 depreciation. What am I supposed to put there? I don't put anything there. But if you're wondering, okay, well, how should I categorize things? Well, this is where we're going to try to funnel your expenditures into. So we're going to funnel into advertising and card check expenses, and legal and professional fees, office expenses, so on and so forth. I would only just mention then also that line 27A states other expenses. Those are expenses that are sort of tough to categorize. Those can be anything. Just if nothing else, just kind of pick some categories. Maybe it's your cell phone. Maybe it's a certain desk fee that you're not sure how to categorize. If you just track it and put its own column for the entire year, that'll do just fine. But this is the actual form itself that's used. There's lots of tax law changes, lots of form changes, but the Schedule C, the schedule that we're looking at, has largely remained relatively unchanged for a number of years. So I'll just mention, and again, we can talk through another question or two, but stay on top of things. If you can review and look at things as often as possible, that's key. And I just want to mention at this time that I've mentioned a number of times employing some help. Maybe an admin, maybe a paid professional or a third party. That could be a great outlet to help with this, but ultimately you should still look at it and review it. So if you've got someone helping with it, instead of maybe scheduling time for you to physically do it, you might be wanting to schedule some time for yourself to review what they've done. Because again, it's easy to look at those things if you're staying on top of them. When you're reviewing and looking through things, just take a step back and look at the overall picture. You can always compare from year to year. What have you done in previous years? And maybe take a look at some percentages. So in the past, I've spent 10% on advertising. What does that look like in the current year? I just want to mention systems allow for growth. So all this stuff sounds like a lot, and it sounds like a lot to keep track of. But these things will allow you and your business to grow. If you struggle with this sort of thing, and you have a vision of having a team someday, putting the work in and having some knowledge related to these items will allow that goal to happen, and for that goal to not become a nightmare someday. Because if you think tracking things right now is difficult for yourself, you have a few folks with you, maybe some employees, maybe a team, and tracking for that becomes a whole other animal. And I'll just mention real quick before we do more questions, of course, don't give up. Even if you get behind, get back into it. You can easily recover. And I generally say, don't take the ostrich approach. So just sticking your head in the sand and saying, that's a problem for tomorrow. That will almost never work. You will have to sort of deal with this at some point in time or another. So you might as well just get on top of it now. And I'll also mention, you've noticed a bunch of office related pictures throughout this. My apologies. I'm an office fanatic. So at this point, Michael Scott is running a 5K, and he's basically given up at the end as he finished up the 5K run. So anyway, do you have any more questions that we want to cover today?
I have a couple ahead that were ahead of time. Is there any on this? Okay. So I do want to hit on do you know these off the top of your head? The amount for the energy, like specifically the home ones, I think are a big one that agents would run into.
Yep. A lot of them. So the biggest items are all related to geothermal, wind, and solar. And those are non-refundable credits. And the credit is back up to 30% of the cost of the system. And in all reality, there's no real cap on that, but it is a non-refundable credit. So once we run out of tax, we will really receive no benefit in that tax year, but it will carry forward. You certainly want to talk to someone because when I say there's no cap, if your tax liability for the year is $5,000 and you put in a $30,000 system and you've got a $10,000 credit, you're only going to really utilize about $5,000 in that tax year, and the remainder is going to be carried forward. If you've done some sort of financing into the solar company, and that financing was sort of banking on this tax refund of $10,000, that tax refund may not be happening because you've run out of tax. And so I've seen that situation before. It's just something to be mindful of. So 30% on a lot of the big credits, and then there's a whole plethora of other limitations for some of the smaller credits. But generally speaking, for everyone's knowledge, all of the credits today generally speaking the highest they've ever been. So anything from an electric heat pump to new windows or doors, all of those credits, insulation, are about as high as they've ever been or higher.
Now, how's that work with the new build? Like, I built a house 10 years ago. There was a 30% geothermal credit then, and it included our ducts and everything that a normal house would need for a heat pump. I got the tax credit.
And if you had to replace it a few years from now, you would get another credit for that system. And so geothermal is a great system. It's extremely energy efficient. If you've got a newer house, and especially if you have space on your land, geothermal systems require well water and a loop, that sort of thing. So it's more than just like your standard like heat pump unit that you would have at your house. But if you have the availability to put in that unit, if you're planning on being in the house for a long time, you can have a substantial amount of energy savings. If you've ever had a geothermal unit and you sort of heat and cool your house with that, and for some reason, if it goes on the fritz and it goes to auxiliary heat or auxiliary heat, you will notice in a hurry just how energy efficient that savings is.
I had that happen.
That happened? Okay.
2 weeks after we moved in.
Yeah. That next bill, and 2 weeks after you moved in, no less. So you might have been thinking initially, like, well, this isn't nearly as energy efficient.
I was not happy.
Yeah.
It was covered under warranty, but still, that electric bill is not.
It was shocking. Yeah. But yeah, it's super efficient. And so the credit is there to help out with that. I'll also just mention, this isn't even tax advice, but anytime you're talking about a geothermal system, and definitely with solar, and a lot of these energy tax credits, a lot of the companies that sell these systems or products have their pricing set, and they often have certain lending deals or incentives. And so you just want to explore your options. And so, if you're looking at solar and they say that the system is going to cost $85,000, which years ago I'd have been like, you're crazy. That's an incredible amount of money, but those are the prices we're seeing today. If you've got the means, that financing they're offering may or may not be your best option. If you ask for a cash price for that same system, it could be $55,000, and there's that much of a difference.
Wow.
So you just want to consider the tax credit is the same, whether you finance the system or if you pay for the system in cash. The cost of the system is the basis of the credit. So we're basing the credit on the cost of the system. It's based on the percentage. It's percentage based on what you pay. But again, I would much rather get a credit based on $50,000 and only pay $50,000 if I've got the means, than pay the higher amount. Now, again, if you're getting lending either way, certainly maybe their lending makes more sense because it's a lower interest rate. But you just want to be mindful of that because the price is not actually the price. It could be lower depending on how you're paying for it.
Absolutely. And before we end, I want to ask you, this is me being naive because I don't deal with this stuff. The 2024 tax laws, they're in place, right?
Yeah, so they are, but in 2024, Congress at any point in time during this year could change 2024 tax laws. So we have them in place, but it's been well known to have substantial tax law changes that are made retroactive for the current year. And I mean, those tax law changes have occurred in December of the current year and been made retroactive. So generally speaking, I mean, we've got really things substantially set for the current year. The Tax Cuts and Jobs Act expiration is not an impact in the current year at the moment, but it is on the horizon. But yeah, no, they have been well known to make changes late in the year and make them retroactive. So
great.
Yeah, it's fun.
Well, thank you so much for being here. If somebody wants to reach out to Chris, Cohick and Associates, you want to give us your phone number?
Yeah, no, I'm at Cohick and Associates. I'm a CPA there. I grew up in Carlisle in North Middleton, and I've been at Cohick and Associates for more than 10 years. We're at 396 Alexander Spring Road, over by the Carlisle Hospital. And our phone number is 717-249-5321. I've got a bunch of great coworkers over there. It's a great office. And so we love helping people. And of course, we're coming up on our busy time for the next couple of months here. So I appreciate you, Rebecca. Thank you for having me here today. I hope this was beneficial for everybody out there. Remember, it's a great time to start keeping track of things, hit your goals this year, make the changes that you want to make. You're able to do it. Anything is possible, but you've got to have systems in place. And this is a big part of your business. So good luck, everyone, this year. And again, thanks for being here.
Well, thank you. We really want to end with a shout out to Enders Insurance because they sponsor all the Lunch and Learn that the Rebecca Foot Mortgage team does. So just shout out to Loretta over at Enders Insurance. And also next month, I am actually teaching the webinar, and it is all about different ways to get offers accepted. And that date is, just want to make sure I get this right, sorry, February 8th, and it will be here at our office at 20 North Hanover Street. So we'll get the invitations out to that shortly, and hope to see you there.
Awesome.
All right, thank you.